Welcome everyone. Thanks for tuning in. Just going to give everyone a few minutes to stream in. And we also have Summer joining us just a little bit later, so going to be a little bit more patient here.
Hey everyone, it's Bobby. Nice to see you.
Happy Friday, as always. Good to see everyone. Glad to be here.
Hey guys, it's Wally. Yeah, thanks for making the effort every Friday.
All right. Yeah, we'll get started just without Summer for now. Topic of this week is farming convex, of course, but we're going to start off with the questions just to give Summer a little bit more time. Oh, there he is actually. Hey, Summer. Come into the speaker's room. You can immediately take over the conversation. No, just go ahead and take a breather, introduce yourself.
Hey, what's up, everyone? Happy Friday. Appreciate you all taking the time to chat today, as always. I think we have a real good topic set up for today. So, really think it's going to be a key cornerstone of what drives yAxis kind of moving forward from V3. So, looking forward to it. Am I the last one to intro?
Yeah, actually, we were about to start without you, but we ruined our party.
Alrighty, perfect. Yeah, I mean, I know we've kind of discussed off and on throughout the Discord about farming convex finance and how that would be a key strategy moving forward for V3. And basically wanted to highlight the recent convex strategy pull request and working with Aronov, who's talented developer, and we're lucky to have helping out. Basically just conveys the progress toward that goal. That's something that we want to kind of iterate on and continue to build out capacity there. And we want to just, given that context, wanted to provide a brief overview of convex finance and just explain why yAxis wants to farm it, and then how farming convex will help kind of accrue value to the project, and then obviously get to everybody's questions as always. So from there, we'd kind of take it to what convex is. So convex is built on top of curve, which kind of we discussed a little bit in the DeFi building blocks episode, where curve specializes in like for like assets that generally trade close in price. So it's more or less pegged assets. So basically that's what convex sits. And so on curve, users are providing liquidity. So through convex, if you're using convex's platform, you're taking that liquidity that you've provided at curve, and instead of basically staking it in curve's gauge, you're going ahead and stake it on convex. And as a result, convex basically is a pooled boosting mechanism. So curves boost on their own platform relies on you owning CRV as an individual, and then you going ahead and locking up that CRV to achieve the boost. And now, let's say you're a yield aggregator like yAxis, you can't take somebody's stable coin and then convert it to CRV, especially if that CRV goes down in value. You can't kind of take that price risk of that happening. So you need to stay in the stable coin, and Convex kind of solves that problem. They take the boost that you can get from locking up CRV, and they basically democratize access to it. So if you go kind of on their front end and you look down, you can see it'll say like CRV boost like 1.5x or 2x or something along those lines. So that's kind of the shared pooled boost that you're able to achieve. So basically, we kind of discussed in that building blocks episode kind of how curve generates yield, which is mostly again from the swaps between those like for like kind of pegged assets, and then also like I mentioned, the CRV rewards play a huge component, and obviously, again, wanting to use Convex as a way to gain access to the boosted CRV rewards. So again, why do we want to farm it? Well, first and foremost, it's uh, it's we get access to the boost without needing to hold and lock Curve, hold and lock CRV, Curve's governance token. So what does that do? That's going to improve our base yield that yAxis is able to offer by gaining access to that boost. And yAxis basically, like I said, can't take that principal risk with user funds by holding an asset other than what was deposited. So if we wanted to get the boost straight up on Curve itself, we'd have to take some rep Bitcoin, for example, and convert it to CRV and lock it. And we also need instant liquidity of users' funds. So we can't have funds locked either. So basically all of those problems are just completely solved by Convex kind of democratizing that access. Furthermore, on top of that, Convex adds CVX on top when you deposit through their platform. So what that does is it further improves yield because it's another governance token. And as we also talked about in the Treasury diversification episode as well, we could take some of the performance fee and convert it to CVX CRV, and we could also hold on to the CVX that we farm, something along those lines. And what it could do is it could help diversify the treasury. You can earn some cash flows on your CVX, and also the CVX is going to have governance votes attached to it, which will basically help allocate CRV rewards to the desired pools. So we could potentially, as a treasury, kind of hold some CVX, and we could vote to direct CRV emissions to the pools that yAxis is currently farming, which benefits our users and it benefits yAxis because we'll get more revenue the more governance token that we're farming. So definitely some added utilities potentially coming with farming some CVX as well, in addition to the fact that it just helps offer a higher yield. Furthermore, so kind of some benefits that yAxis can provide to the user as to why yAxis sees opportunity in farming Convex is that Convex Finance does not auto compound. So yAxis can basically provide a service of auto compounding and also have fund oversight with a project known for its security. So basically, if there ever were to be an issue in Convex Finance, it's kind of developing some Lindy right now, but having some fund oversight and having a project again that with a security focus being the one that's kind of doing the auto compounding and doing the fund oversight, as opposed to having to manage it yourself, which gives you a little bit more of a set and forget user experience. And then another kind of big value add is Convex has a wide range of stablecoin, Bitcoin, and Ethereum pools, especially stablecoins. As new pools kind of popping up all the time. Obviously, those pools really exist on Curve, but routing through Convex, and there's a lot of variation in yield from time to time and week to week within kind of each of those stable coins, and even within the different peg Bitcoin and Ethereum variations. And also, many would argue, in addition to that yield variation from week to week, is many would also argue that each stablecoin or pegged asset has a different risk profile. So some might trust the pegs of certain assets more than others for various reasons. And basically, as a meta aggregator, yAxis can have multiple strategies that create more of we'll call it like a composite convex yield, which helps mitigate the yield variability and diversify some of that risk, and also simplifying the user experience. So the user experience, like right now, the user experience on Convex is you're hit with, boom, like there's so many stable coins, I don't know which one to pick. And so, yAxis can really help developing that composite yield, so sort of like an ETF for yield, if it makes sense. And then also, like I said, diversifying some of the peg risk and just really making that a simple user experience. And Like I mentioned before, how the CRV is allocated to different pools, and there's a governance component of that. The same way there will be a governance component of allocating y-axis to different vaults. It's the same gauges system. So basically, that creates yield variability from time to time. So having a nice composite yield to smooth out some of that variability is also a nice value add. And then kind of how does that value provided to the user actually trickle down to y-axis? So basically, if we are able to offer a higher base yield through this, we're going to be able to obviously support more TVL, more attractive yield, higher base yield, more TVL. Also, the yield being offered is less reliant on yAxis rewards. So that creates less sell pressure on the token. And then also, the more governance token being farmed by having boosted CRV and CVX generates more revenue for the project as well. And just an example, some of the others in the yield aggregation space have kind of implemented Convex strategies recently, looking at Badger as an example. And since they implemented 5 Convex strategies for various versions of Peg Bitcoin, they did that on June 24th. They're up 54% versus Ethereum and 135% versus USD since then, compared to they were actually down 60% versus Ethereum the prior 2 months. So you're looking 2 months forward to today, up nicely versus Ethereum, and obviously Convex and drawing the additional TVL and revenue there plays a huge role. So with that, I think I'm going to start to pivot into the questions that were asked in advance. The Tisk always leading it in with a food question. This week asking, what's your favorite food comprised of multiple things from a farm? I will spin it around the horn for others to comment on that, but I would just say that I hope all of your food originates at a farm. That would be my comment to that.
Yeah, actually, that's a really good point. I'll just throw mine out there. Yes, everything on a margarita pizza should originate on a farm. So that's going to be my vote.
Yeah, Bobby,
Sorry,
go
go
ahead.
on. Okay, we're so keen to answer the question. I'll say just like a traditional kind of pot roast where you chuck everything into like a slow pressure cooker and let it stew. That's pretty good.
Yeah, for me, I think I kind of misunderstood the question in the first place because I was thinking only of things that came from farm animals. So in my case, I'm picking something called Beiti Kebab. I'm not sure if you guys have heard of it, but I'll send a picture. It's like a little roll of little mincemeat in a roll, and then you have like a lot of yogurt on top. It's really refreshing. Great summer kebab that not a lot of people know of. It's really easy to make as well.
Great. And I think for me, Wally here, I'm going to be boring and say roast chicken.
The usual.
The usual.
Healthy Wally.
Nice, Wally.
That's too funny. Alrighty, so popping into Big Poppy asks a series of questions, so we'll run through those really quick right now. I think so Big Poppy asked, with farming Convex, I assume we are providing liquidity and not staking their tokens. Is there ever an occasion we consider investing in something like staking on Convex? So yeah, yes to providing liquidity, because that liquidity is eventually going to be routed to Curve, because the assets we're going to be supporting are stable coins, Ethereum, Bitcoin, Link. But and just to remember that when a user deposits an asset with yAxis, like one of those assets, so yAxis can't take the risk of underperforming that asset because yAxis's role is purely to earn yield on that asset. So thereby we can't just choose to convert that asset to CVX and stake it because we run the risk of underperforming that asset. So we need to take that asset and actually earn yield on it directly and retain upside exposure to that asset. But as kind of we discussed in the Treasury Diversification episode and something I touched on earlier, it's something we could consider doing. We could consider staking CVX or staking CVX CRV on their platform with some of the revenue generated, because that would be, the project's funds are entitled to the project, not to users. So a little bit of a delineation there. So yes, possible, just not really so much with user funds themselves. And Big Poppy also asked if we are earning CRV, what will we do with the emissions? Double down on our investment or accumulate it for other investments? So kind of same as above, like we have to compound it back into the strategy to continue to earn yield for users in the asset that they deposited. And Big Poppy, I like this comment here. Can we just take a minute to appreciate that the main developers of Convex, one of the most successful projects in recent memory, and one of the largest DeFi projects ever in terms of TVL, is led by an anonymous team. They have over 6 billion in TVL and garnered trust and investment across the community. And yeah, I mean, this is obviously great to see, and you got institutions and funds aping in on Convex. I love the quote from Banteg a little while back, the Yearn developer. He said, basically, I suggest you take on an anonymous identity if you want to be taken seriously in the future. So I thought that was a pretty interesting comment. But yeah, no, obviously good to see, and I think you see anonymous founders and teams, raising money from VCs and even the likes of Coinbase Ventures, etc. So I think the tide around that is really shifted for the better, and I think people really understand the desire for some personal privacy, and I think that's really key, and I think the market and the community are really coming around to that and really supporting that. Big Poppy also asked if the drop is in August. If the drop in August is 200K yAxis tokens, what are the additional buybacks going towards? They're actually less buybacks than 200K, so there wouldn't be any additional, and the gap there will be actually supplemented, funded by the flexible allocation in the Treasury, kind of as we communicated at the time. So yeah, there's not more than 200K tokens that were bought back in to date.
Just to jump in and top, just in case you mean going forward, what are the buybacks going to go towards? Because for now they've been going into a separate fund for this drop. Going forward, we'll have an adjustable performance fee. So we're still deliberating exactly where that's going to go exactly. So it could go to back to stakers, for example, or like we talked about in a previous, you heard, maybe changing the buybacks towards buying back a different asset to try and diversify the treasury a little bit.
Yeah, no, that's definitely helpful context, Bobby. It's something that I think a lot of the community was really supportive of on the forum post, was taking some steps to diversify the treasury, so we're basically not as reliant on selling our own token to fund things and actually able to earn some cash flow from the treasury as well. So I think that's definitely an important consideration as we move forward. And then Big Poppy also made a little joke about a little geometry joke with curve and convex and y-axis. And then I am that asked a couple of questions here. One of them being, what are the yield that we can expect on the vaults? How do emissions fit in, and what's the plan here? So, like I said, want to farm. Going to kind of be rolling out some Convex strategies, kind of as we come out of the guarded launch, etc. So I'd kind of look to Convex's yield offerings as a pretty good starting point. Remember that Convex's offerings are in APR form, and yAxis would compound that. And then just know that on the emissions side, that emissions are going to scale up with TVL. As we kind of discussed in the emission strategy episode, a forum discussion, the community really wanted it to scale proportionately with TVL, which the team and champs kind of agreed with as a good ramp up approach as we sort of gain momentum, especially starting with the guarded launch. You're going to want to start with low emissions, given there's going to be low TVL, and you want to kind of ramp that up as TVL, sort of proportionate with TVL. And then also I want to make note as well is that there won't be a set yield across the board because of the boosting mechanism from the gauges. So depending on users' individual boosts, there won't be a one yield for all users essentially. I am that also asked, Convex is our base strategy, right? What's the roadmap moving forward? How many additional strategies can we add per month? So the base is like how the vaults are written right now. The base is curved with a plan to quickly add kind of the convex strategy in afterwards. The reason why it's written with curve is just to ensure little change as possible, kind of for security reasons, given that V3 is already a big change from V2. So I want to just change as little as possible. And then, from there, various convex strategies should essentially become the de facto base strategy. Like Convex's boosted 3 pool will probably be like the de facto base strategy of like the stablecoin vault, for example. And the plans to continue to write more strategies over the coming month and sort of, roll those out as we sort of kind of come out of the guarded launch. When does I am that also asked, when does Era 2 officially start, and will it be 3 months, or have you found that in Era 1 this is too short? Era 2 kind of already started technically, and so we're going to stick with that announced schedule. I know it's supposed to kind of roll out with the launch of the vaults, but we want to just stick to kind of the announced schedule there, and looking forward to the vaults going live soon, the gauges going live. Did we get a slot with C4, and when is it? I think right now it's looking like kind of mid September. I don't know, Wally, did you want to add anything on that?
Yeah,
I think sorry,
Kebab.
sorry, I keep talking over everybody. I'm sorry for that. Yeah, so I think the decision is that it's either whether we do a bounty contest on our own, or if we do it alongside another one. So if we were to do it alongside another project, then we can start basically a week earlier. Or if we want to have one just exclusively for yAxis, then it would be mid-September start. So that's for us to decide, and we'll make that decision pretty shortly.
Alrighty, perfect. So the next, and this kind of relates back to that's question about the yield being offered on the vaults, and we'll have a little bit of an in-depth discussion here, given that Zach asked, is the vaults return competitive enough to draw in a large amount of TVL? For example, competing with Badger for Bitcoin, Yearn for stables, Alpha for Ethereum, Bancor for Link. And so the short answer, and I'll go through in a little bit more detail, but the short answer is yes. And also you have to also think about some of the co-benefits discussed about having yAxis kind of manage the position in terms of a composite yield, simple UX, risk diversification. Some of the names mentioned there had been exploited before, so that's something to think about as well. That it's not always about the nominal yield, even though I walk through that yAxis would probably be able to beat most of those yields. We'll actually, like I said, we'll walk through that. But again, it's not always about the nominal yield being offered. Some of that it's like if the yield's high but it got exploited, then that's a different kind of equation as to what the EV is on that move. So short answer is yes, and there are also some additional co-benefits for having yAxis sort of manage the position. And then to go through a little more detail on some of the examples you provided, Alpha is about 4.5% for Ethereum right now. We can farm with Ethereum on Convex right now for similar or better yield, and then obviously having some yAxis rewards on top, so the user can receive higher than that, especially if they're boosting their deposit 100%. And if we find that alpha is a better base strategy, we can always just farm alpha. That's the nice part about sort of the position. And so Yearn for stables, Yearn's DAI vault is 6% yield and USDC is 8%. And we can farm anywhere between 9% and high teens as a base yield on Convex right now, plus yAxis rewards on top of that. Badger's unboosted yield on Bitcoin right now is, so if you don't own Badger and then boost, their unboosted yield with just the base Badger rewards would be anywhere from about 3 to 10%. And then yAxis can farm Convex as a base strategy for high single, low double digit yields, and then plus like the base yAxis rewards on top of that as well. So again, competitive across the board. And remember that we can always just create a strategy to farm others if we like their base yield. If we like where Badger is, we can always farm Badger, etc. And then Harada asked, first off, just immaculate work on the brackets lately, but asked a question about, hold on, I lost that question. Alrighty, perfect. So we need to establish a date for the great harvest drop, even if it's 31st of August. So again, just look for some communication on that soon. Bobby, anything that you want to add to that, or?
No. What else would you like to talk about on it?
No, I think we're good there. And then the second kind of two-tone, like second part of the question is, more volume. In Harada's opinion, more volume is needed to fuel yAxis, and listing on an exchange to do the trick, even if it's tier 2 or tier 3. I think the positioning on exchange listings has been, pretty clear. I'm not really sure what the value proposition of a tier 2 or 3 exchange would do, besides really some wash volume. It's a massive upfront cost for the project and an ongoing cost, which hurts the token and the treasury and the ability to attract developer talent to actually build the product. And if you look at coins that trade on dexes and then on second tier exchanges that are actually honest about their volume, so not the not the hot bit like $5 million volume today that is out of nowhere, but like if you look at like a coin that trades on KuCoin and then a dex or something like that, they always do more volume on the dex. So and not to mention, I mean, volume for the sake of volume doesn't really add value, especially wash trade volume. That doesn't add value to the project, and again, it's a big ongoing cost. I think it's just personal opinion, I would think that unless you're like Binance, FTX, or Coinbase, I don't think you're really gaining much value from being on an exchange, and those things become more feasible kind of a post V3 launch, but to draw a lot more TVL, some buzz. I mean, we just saw Harvest list on Coinbase, so there is a pathway there, especially in the yield aggregation space. But things need to kind of work themselves out before that, which is continuing to build out the product and creating organic traction. And that's really what matters, and that's what drives volume, and that's what drives price appreciation and opens up some of the tier 1 opportunities that could potentially actually add value to the project.
Like KuCoin, for example, does cost 250K for a listing, and then you have to pay like a yearly or monthly kind of trading fees or market making fees. So it's tremendously expensive upfront and ongoing cost to do it. And then you're of course subject to then regulations or any restrictions from that individual exchange and maybe it differs on different jurisdictions as well, so it's quite tough. And yeah, Harrod, for the Great Harvest, yeah, we'll try and get it out this weekend. We can't super promise that'll be this weekend, but either that or very shortly afterwards. We have talked as a team, and we probably want to get that out for sure before the vaults launch. We were previously waiting for the vaults to launch before we did the drop, but now we're going to do that beforehand. So it is already, it's up on testnet, so we're just going to scoop in the eligible addresses, and it should be ready for a quick test and then to release it.
Alrighty. Thank you for that. Thank you for that, Bobby. And then the only other question that I really came to mind is Misam asked about a strategy with Balancer. I think maybe thinking Bancor, because it says pretty good with impermanent loss. I'm thinking Bancor there. The only thing with Bancor is that to receive the impermanent loss protection, you need to lock the funds up, which wouldn't be as useful with yAxis, because we need instant liquidity. If a user withdraws, we have to have the funds available for them to withdraw, etc. So I know I think
I do think actually that he means Balancer, because Balancer has a V2, which is, or I don't know if it's V2, but they have a new version, which is sort of like Curve, and they have like for like assets in a single pool and quite high base yield there. So in
yeah,
that
the
sense,
stable pool on Balancer. Yeah, nah, I get what you're talking about. Yeah, so yeah, there are some pools on Balancer which are like for like assets, so therefore impermanent loss is pretty low. So yeah, I mean that is something that we could also consider as a base strategy and kind of compare that yield to what Convex is offering, and decide from there. So good call. Alrighty, I think with that we'll kind of wrap it up for this week. Hopefully you guys learned something about Convex and what it could maybe provide for the the value it could provide for the project, and then also some good questions there from you guys about Convex and some other project strategy things. So appreciate it as always, and everybody have a great weekend.
Thanks, everyone.
Thanks everyone.
guys.
Thanks for joining. Bye.
Bye bye.
Thanks, everyone.